Good morning, everyone. It's absolutely wonderful to welcome you here. So I'm Karen Ward, I'm the Chief Market Strategist here at JP Morgan Asset Management. Many of my colleagues are in the room. And it really is a pleasure to host the Royal Economic Society Women in Economics Network here today. We've got an absolutely brilliant agenda for you. You're going to go away with content, educated, inspired. That is the purpose of these events. In terms of the broader mission of the WEN and why for us at JP Morgan, it was so important to partner and support this event. Now, I remember 2 years ago, we said, with all that's going on in our own domestic economy and in the world, bringing the best talent that exists in the UK into the field of economics and then supporting people through a career in economics is absolutely imperative. I said that 2 years ago. I think the sense of urgency feels even more desperate today to make sure that the best talent is coming into the field of economics. Certainly for us at JP Morgan Asset Management, diversity is all about talent. It's about making sure we have the best minds, feeling comfortable and want to come and work here. So that's all I wanted to do, just to welcome you. Really hope you have a great morning. As you can see, the agenda is absolutely brilliant. And so I'm just going to pause there, hand over to Imran Rasool, who's going to give his opening remarks, of course, Professor at the LSE and President-elect of the Royal Economic Society. So Imran, I'll pass over, the floor is yours.
Thanks, Karen. So on behalf of the RES and particularly the Women's Committee, I offer a very warm welcome to everybody for today's event. Thank you for joining us both in the room and online. Improving diversity, inclusion and integrity in the profession is a key strategic objective of the RES. Economics has the best chance of improving society and the world around us if those who produce and use economic research are drawn from diverse backgrounds and experiences. We have several targeted initiatives at the RES to support this goal, and the UK Women in Economics Network is one of our key initiatives, supporting the career development of women in economics across all sectors. Since the launch of the UK WEN in February 2023, the network has gathered significant pace. We have seen exceptionally high demand for UK WEN events, and there's a real energy to support this agenda. You will hear more about our activities from Almudena a little bit later on today. We are very grateful to all our partners, sponsors, and volunteers who have enabled us to develop this network over the last 2 years. Specifically for today's event, we offer our sincere thanks to Karen and to JP Morgan for hosting us in this wonderful venue. I'm really looking forward to hearing from all the speakers today, and would like to express our sincere thanks to them all for giving their time and insights so freely and generously. Before we turn to our keynote speaker, I would like to remind you of the RES Code of Conduct. We expect our events to be positive environments where everyone is treated with dignity and respect. We all have a role to play to achieve this. As one of the hosts, I'll be active to challenge behaviors if necessary. As participants, I ask you to ask questions respectfully and from a place of genuine curiosity. So without further ado, I'll hand back to Karen to introduce our distinguished keynote speaker.
Going to get my steps in today, aren't I? I'm definitely not going to have a problem on that front. I need my notes for this one, because although Megan Greene needs no introduction, she has a very illustrious history and career. So she is, of course, at the moment, an external member of the Monetary Policy Committee at the Bank of England, so one of those key interest rate setters. She's a senior fellow at the Watson Institute for International and Public Affairs at Brown University. She teaches at London Business School. She serves as the Academic Advisory Committee at the San Francisco Fed. She's a senior fellow in global macroeconomics at Chatham House. How do you find the time? I thought I was busy. And prior to her appointment at the MPC, Megan was Global Chief Economist at Kroll, which is a business services and risk mitigation firm. I suspect they're busy at the moment. And you'll also have seen many of her columns in the Financial Times and elsewhere. So absolutely delighted to welcome Megan to the stage. She's going to give our keynote, and then I'm going to join her and we'll get a chance to ask some questions after that. So Megan, thank you.
Great. Thank you to all of you for coming. Thanks for hosting me. Thank you for that introduction. Few people bothered to try to go through all the different affiliations, but you did a great job. I wanted to talk about the UK economy. I'm going to speak for about 20 minutes, and then there will be loads of time for Q&A. So hopefully you guys will have some. As I was thinking about how I might address the UK economy, I decided to start with our forecasts, but then to talk about policymaking in the face of uncertainty. There are numerous risks out there, so I just wanted to highlight some of them for you guys. I recently appeared in front of the Treasury Select Committee in Parliament as part of my job, and they actually went through and counted the number of times that the MPC had mentioned uncertainty in our publications. It's gone up exponentially, which isn't much of a surprise, but I do think it does suggest kind of the times that we're in. I thought I would start off by talking about our central forecast, which we always publish as part of our monetary policy report. And again, then I thought I would talk about how it might be wrong and in what ways, the kinds of things that I'm thinking about. Forecasting these days is really complicated. It's always complicated, but particularly in the face of uncertainty. Of course, inflation sustainably hitting 2% in the medium term is our mandate. So I wanted to start with our inflation forecast. And this chart is meant to show that we've recently introduced a near-term hump in our inflation forecast. That's not the big one that you see here. The big one was the hump in inflation we had during the pandemic when inflation went up to just over 11%. The hump we're looking at now in the forecast is in the shaded area. You can see it's much smaller than the hump that we had during the pandemic. But given the inflationary experience we've just had, it's something to watch out for. You can see that we have this near-term hump, but that it doesn't last. So we have inflation going down to our 2% target sometime in 2027, so by the end of our forecast period. And part of the reason that we expect that this won't last is because of the comparison with the previous hump. So we are in a very different environment now than we were in back during the pandemic. The disinflationary process has been underway. We expect it to continue. The labor market is easing, which is different from the pandemic when it was actually tightening. That generates different wage and price setting dynamics. So we have this near-term hump, but we don't expect it to last. We think inflation will hit just under 4% at its peak later this year and then come down towards our target. On the growth front, this is one of our so-called famous fan charts. The main message to take away here is that activity is pretty weak. It's been pretty weak, but we expect it to pick up over the course of the forecast period. By the end of the forecast period, it should be somewhere between 1.5% and 2%. So while activity is really weak right now, we do expect that that should improve. And then the labor market, as I mentioned, has been easing. The pace at which it is easing has slowed in recent months. This is just a chart showing the vacancies to unemployment ratio, which we've deemed to be one of the best ways of looking at slack in the labor market. The aqua line is the equilibrium vacancies to unemployment ratio that bank staff have calculated to include the cost of finding new workers. And the orange line is the actual vacancies to unemployment ratio. You can see orange has dipped below aqua. And so the orange line has come down significantly now. Actually, it's a bit below the equilibrium VU ratio. And so that suggests there is a bit of slack opening up in the labor market. We expect unemployment to tick up as with other developed economies. The sacrifice ratio has behaved very differently from what we've seen in previous cycles. So we think unemployment will probably pick up from around 4.5% to around 4.8% by the end of the forecast period. That's not as much as you might have expected if you looked at every other inflationary period that we've had in the past, but again, that's mirrored across other developed economies as well. So this is the kind of foundation for our central forecast. For those of you who have watched our communications, we've come up with so-called cases or states of the world. The forecast reflects a case 2 state of the world where actually monetary policy has to bear on the economy, open up an output gap, and that brings inflation down to the 2% target. So that's embedded in our central forecast. I think that's a reasonable assumption. So I'm happy to sign up to the case 2 state of the world central forecast. But as I mentioned, I want to talk about some of the sources of uncertainty that we're facing, and there are actually many. One is a question of this weak activity that I've talked about. We've effectively had no growth over the past 9 months or so in the UK. And usually as an economist, when you look at short-term fluctuations in activity, you can generally assume that they're demand-driven. And there is an argument to think that maybe demand is a big driver in weak activity over the past year or so. You can tell a narrative about confidence really flagging, and that's shown in the chart on the left. Consumer confidence, you can see that it's been dropping. And in the chart on the right, that just shows business confidence. You can also see that for the median business, that's also been falling more recently. So confidence has weighed on activity. That could be, influenced by policy uncertainty. As people waited for the budget came out. There's uncertainty about how the measures in the budget will actually play through the economy. And so that has weighed on demand. That is certainly one argument for why activity has been weak, and I think it certainly comes to bear. But I don't think that's the whole story, because as I mentioned, the disinflationary process continues to be underway. But actually some of the indicators of underlying inflation persistence haven't faded as I might have expected. So in particular, wage growth and some domestic factors underpinning inflation have been stronger than I might have hoped. And that might suggest that actually there's a supply component to weak activity that we've seen lately. So, generally, if you have a demand shock, that tends to push inflation and activity in the same direction. If you have a supply shock, as a rule of thumb, that often pushes inflation and activity in different directions. And so you kind of enter a trade-off territory where a central bank has to worry about hitting an inflation target, but also the impact of weakening activity, in this case, on your inflation. And it looks like you can see in the chart on the right, this is just news in the data up until the second quarter of this year relative to our forecast back November. You can see that wage growth has been higher, inflation is surprised on the upside, and GDP growth is surprised on the downside. So we've, in successive months, have moved further into trade-off territory, which suggests that actually there could be a supply component. That's also reflected in the chart on the right. It's a chart showing our forecast for wage growth. The actual data and our latest forecast for wage growth are in the aqua. This is looking at AWE, regular private sector pay. The white lines are our previous forecasts. You can see we keep expecting wages to come down, but they've come down slower than we've expected. In fact, we have an entire suite of models we use to forecast wages, and wages remain above what our models can explain. So that also suggests there might be some supply issue underpinning this. The reality is that it's almost certainly supply and demand. The challenge with the supply story is that in the absence of some massive shock like a pandemic or a war, it's really hard to come up with a narrative for what's constraining the supply side of the economy. We can't really measure things like productivity growth in real time, so that makes it challenging. It's even harder in the public sector and things like health services and education. So there could be measurement issues embedded in that as well. But it's just to say we might actually have our starting point for supply a bit wrong. That's possible. So that supply is actually weaker than we had expected. So I'm worried about that. I'm also worried about supply going forward. We've had a recent revision to population statistics in the UK. But GDP growth data hasn't been similarly revised. And so the assumption that you make is that if you've got a bigger population, but GDP is the same, productivity growth has probably suffered. And we expect productivity growth to recover back towards trend. But I think there's a real risk that that doesn't happen and that supply will continue to be constrained. Now, whether it's demand or supply has bearings on what you think this all means for monetary policy, right? Supply, if it's a supply constraint issue, then that would, on balance, tend to be inflationary. If it were a demand-driven process, that would be disinflationary. I'm a little bit more worried about supply than I am demand at the moment. That's one source of uncertainty. Another source of uncertainty is the sensitivity that people may have just developed to inflation, given the inflationary spike that we had during the pandemic. We see that inflation expectations have been rising. They've been rising for over 6 months now among households, not so much according to financial market metrics of inflation expectations, but household inflation expectations have been on the rise, both in the short term and also in the medium term, which is about 5 years. Now, central banks really worry when you start to see inflation expectations rise beyond what you could explain, and I don't think we're there yet. But it is important to keep inflation expectations well anchored. Now, these inflation expectations are kind of within the bounds of confidence intervals. So again, I think inflation expectations do remain anchored. But I think it is a concern that they've been rising for the past 6 months. And as I mentioned earlier, we had this near-term hump in our inflation forecast. So how do people respond to that? The academic literature will tell you that if inflation's under 4%, people just don't tend to pay any attention to it. 4% is kind of the magic threshold. But it's possible that given we had inflation above 11% previously, that people are a bit more sensitive to it. So that threshold might have changed. And if that's the case, then we would worry about second round effects kicking in when inflation does continue to rise in the very near term. So that is a concern. It's not my baseline forecast. It's not in the central forecast of the MPC, but it's something that we're certainly watching. Another source of uncertainty is energy prices. I think energy prices and currencies are probably the hardest thing to forecast of any kind of asset class. And energy prices have a huge bearing on inflation. They have a bearing on core inflation. Even when you strip out energy prices, they tend to be an input into the remainder anyhow. So energy prices are important to look at. This is just a chart showing wholesale energy prices, which have fluctuated massively. They fluctuated massively just over the course of the past month, actually. And the way that we do our forecast on the MPC is we take market pricing for energy and put it into our forecast. This chart, you can see at the end of the aqua line, there's a big jump up and then a big jump down. This all happened within the course of about 2 weeks. So when you were doing your forecast mattered hugely in terms of what you thought might happen to inflation just because of the fluctuations in energy. And of course, we have our own domestic price setting for energy, the Ofgem cap. And this is just to show there's a window over which the Ofgem cap is set. The window is the shaded bit. You can see that so far we're about halfway through the window, and so far energy prices on average have been a bit lower than they were when the previous cap was being set. So that suggests that energy prices might come down, but we'll see what happens in the second half of this window. There are reasons to think that energy prices, gas prices in particular, might come down or might go up. On balance, I think there are moderate upside risks to gas prices, but this is, of course, highly uncertain. It's possible that there will be a relaxation of EU storage targets. Some EU member states are pushing for this, so the Commission doesn't seem to be in favor of it. But if there were a relaxation of storage targets, that could reduce demand for gas and so could push prices down. There could be changes to Russian supply. When I put this slide together, it seemed like a ceasefire in Ukraine was the more likely outcome. Then it seemed like actually a doubling down on sanctions on Russia by the US seemed more likely. So just to highlight, it could go in either direction. And again, this has a huge bearing on inflation, not just in the UK, but everywhere. There has been a structural change in the market. So it used to be that countries would load up on gas during the summer when prices were a bit lower. But since the invasion of Ukraine, that has fundamentally changed. So summer prices aren't really trading at a discount. So on net, that could push gas prices up. We expect a huge amount of LNG supply to come onto the market over the next couple of years. If that's delayed for whatever reason, that would push gas prices up. And then finally, you could see greater demand from Asia for LNG, which could push prices up. In particular, China's just announced a 5% growth target. If you think that China will hit that growth target, that could mean that there's a lot of demand for LNG coming from China, and that would create more competition for the EU and the UK, so that could push gas prices up. So just to highlight, there are risks in both directions, but actually this impacts headline inflation forecast pretty significantly. Another source of uncertainty that we're facing in the UK in particular is the quality of our statistics. Anyone who's been following the UK economy already knows this, of course, but just to highlight a few of the challenges. The labor force survey has had some challenges, certainly. The response rates have dropped pretty significantly since before the pandemic. In fact, this isn't just a UK phenomenon. It's the same has happened across developed economies, but it does seem to be worse in the UK than it is elsewhere. You can see that there's been a recent uptick in response rates, so that is positive, but it does mean we have a somewhat murky picture in official statistics of the labor market. And of course, the Bank of England has a single mandate, which is inflation sustainably at 2% in the medium term, but of course the labor market comes into that. I showed you the VU ratio. That's how we figure out how much slack there is. The U part is unemployment. That comes from the labor force survey. So that does make it challenging to figure out what's going on in the labor market. That said, we don't just have these ONS labor force survey official statistics. We look at a wide number of measures alongside these official statistics. So this is just a chart showing an indication of how we get a sense of employment growth, which is important. We have the orange line, which is the LFS employment growth. So you can see it's much more volatile than what we see in, for example, the HMRC RTI payroll data. We've built our own indicator-based metric for employment growth, and it's a lot less volatile than the orange line, the LFS survey. So we can aggregate various other sources to try to figure out what's going on with employment. The same goes for unemployment. The LFS survey this time around is in aqua. It has been pretty volatile. This is just looking at the change in the unemployment rate on a quarterly basis. We've built our own indicator-based model that's much less volatile and shows that there's been less of an uptick more recently. And then all of this can help inform our views on slack in the labor market, which is important because we're trying to figure out what's going on with wage growth. If you do a decomposition of inflation, pay growth is by far the biggest contributor to services inflation, which tends to be domestically generated. So we spend a lot of time looking at that. So it's unlikely we'll get a further significant fall in services inflation unless pay growth starts coming down. Also, core goods inflation has been buoyant lately. There's a component of that, which is also pay growth. So we spend a lot of time trying to figure out what's going on with wages. These are some of the indicators we look at that measure wage growth. We have private sector regular AWE, which is the official statistic. It's in the aqua line. Sorry, this chart's a bit hard to look at because there's so much on it, but it is just to underscore how much we're looking at other indicators to get a full picture as possible on the labor market. The aqua line's ticked up recently. But we take some comfort from the fact that that's going in the wrong direction, but we take some comfort from the fact that all these other indicators aren't showing that kind of uptick. AWE has been volatile in the past, so we look at all these things to get a better picture. It does suggest that wage growth is coming down, but it's not coming down as quickly as I would like to see. If you kind of do a rough and ready calculation of productivity growth of about 1% and an inflation target of about 2%, you want to see wage growth around 3%, maybe a bit higher to account for import costs. That's consistent with our inflation target. Wage growth is much higher than that. Though our agents' pay survey suggests that wages should continue to come down and should hit around 3.7% by the end of the year. So it's moving in the right direction, just more slowly than I would like to see. But in any case, it's difficult to get a full picture of that, given the quality issues we have in some of the statistics. While I'm talking about measurement problems, another issue we have is in figuring out how restrictive we are. Pretty much every major central bank has declared that they're restrictive, and that's obvious when rates are really high, but as rates have been coming down in a rate cutting cycle, there's a question about, how restrictive are you, and how do you know? Of course, to figure that out, in theory, more than in practice, you have to estimate R star, which is the long run neutral rate, which probably isn't a new concept for any of you in this room. That is rife with methodological issues. We've taken a stab at sort of updating our views on where R star is since our last update in 2018. We looked at some financial market measures. We looked at some surveys, so we asked investors what they thought. We also did some macroeconomic modeling based on the IS curve, and you can see they're just wildly different estimates, but they all go in the same direction. So they all suggest that R star has probably risen since 2018. The question really is how much. For what it's worth, all of this is in the February monetary policy report if you're looking for it. And it seems like there are some countervailing influences on R star. There are a number of things that have been pushing R star down for a long time since the global financial crisis. And continue to. That includes demographic trends and higher risk, which both spark greater savings and greater precautionary savings. Global trade fragmentation is a slightly newer one, but it reduces productivity on balance, so that could push R star down. And then there are these other factors that have probably been pushing R star, big R star, so the kind of long-term, long-run neutral rate up. So we have a sense that R star has probably risen. We don't have a point forecast for you. I don't have a point forecast for you in case any of you wanted to ask later. So how do we know that we're still restrictive? And I think for that, you have to look at some of the data. So this is just a chart showing our saving ratio. The saving ratio is around 10% in the UK. That's much higher than most economists might have forecasted. That suggests that we're still in restrictive territory. And then the flip side of that is that household consumption hasn't really come back as one might have expected. So households are sort of hoarding their savings rather than going out and spending, even as interest rates are coming down. So this chart shows consumption relative to before the pandemic. You can see that we've just exceeded consumption since before the pandemic. In the US, consumption is about 10% higher than it was pre-pandemic. So the UK household is behaving differently. And that is also an indication that policy is still restrictive. Another source of uncertainty is domestic policy, and that's particularly relevant today because a whole bunch of measures that were announced in the autumn budget actually kick in today. And in particular, there's a lot of uncertainty in my mind about how firms will respond to the increase in the national living wage and also the increase in the national insurance contributions, or the NICs. We've gone out and asked firms how they plan on responding to the national living wage and the NICs, which effectively just means employment costs are higher for them. We've also looked at a bunch of other surveys on how firms plan on responding. There are a bunch of different margins for adjustment that firms might adopt. They could just pass the higher employment costs on to the end user in the form of higher prices, which would be inflationary. They could also try to adjust through the labor market. So they could either offer lower wage growth or they could lay people off. That's possible. They could let it eat into their margins, or they could try to deploy capital to boost their efficiency and productivity that way. As you can see, this is an amalgamation of different surveys, including our own. There's no obvious way that firms are going to respond to this. When we tend to ask which margin of adjustment firms are going to use and list them all out, they tend to respond yes, all of them. And so this is very much a source of uncertainty for us. As you can imagine, if firms pass on higher employment costs in the form of higher prices, that would be inflationary. But on the other hand, if firms decide they're going to use the labor market as a margin of adjustment, that could result in a shakeout in the labor market that could sap demand, so that on balance would be disinflationary. So this is a big source of uncertainty that we spend a lot of time going around the country asking firms about, but it's too early, given it didn't actually kick in until today. It's too early to have a definitive answer so far. And then finally, another source of uncertainty is foreign policy. The UK is a small, open economy, so has to pay attention to what's going on in other parts of the world. That goes for spillovers through trade, but it also goes for spillovers through financial markets. This is just looking at how the UK gilt curve at different parts of the curve are shifted around by developments happening in the UK and elsewhere. And the chart on the left, it's at the shorter end of the yield curve. The chart on the right is 3 years on. But the aqua part of these charts is the UK. So this is a source of shocks that come from the UK, moving the UK gilt curve. And you can see that the aqua line accounts for about half of the moves in the gilt curve, which means that the rest of the moves are coming from outside the UK, predominantly from the US in the Eurozone. So I think one sell-side analyst, the US is a particular influence. One sell-side analyst said we're all kind of tied to the drunken dragon of the US Treasury curve. And I think that's right. Our curve moves around a lot based on what's going on in the rest of the world. So we have to figure out what the risks are. Globally, generally, there has been an increase in uncertainty writ large, as evidenced by the number of times that the MPC is mentioning it, particularly around trade policy. So this is just a chart looking at trade policy uncertainty. You can see that it has absolutely spiked, particularly since President Trump was inaugurated. We find that if you have an increase in trade uncertainty, particularly a sustained increase, it on balance tends to drag on investment and also on consumption. So that can in and of itself have macroeconomic implications. But of course, we also have tariffs. There have already been some tariffs announced. There, in theory, are a whole bunch that might be announced tomorrow by the US administration. I have taken a stab, we have taken a stab at modeling kind of the implications of tariffs on the UK economy. This is just a summary. This is a cheat sheet of my last speech, actually, showing all of the channels of propagation for tariffs through the UK economy. You can see the big difference in this is actually just at the exchange rate movement bit, and that's where the arrows differ. The left side of this table is if there are unilateral tariffs imposed by the US on the UK. The right side is if the UK and other countries actually retaliate. And the big difference is exchange rate movements. We use the ECB's model, the ECB Global, to try to look at the channels of trade propagation just because it's well set up for this kind of thing. And it turns out the exchange rate movements are really key. But the model assumes immediate and full pass-through of exchange rate movements into import costs, which probably doesn't happen in real life. So you need to take some of this modeling with a grain of salt. The take-home message is if either way, if there is retaliation or not, it tends to drag, tariffs tend to drag on UK output. For inflation, it's a different story, particularly when it comes to retaliation. The implications are a little bit more ambiguous, but on net, it seems it would probably be disinflationary for the UK economy. And we can go through those channels of propagation if you want during the Q&A. And then finally, the US isn't the only game in town. The UK's biggest trade partner is actually the EU. And there has been a transformational change in Europe, particularly in Germany, in terms of spending. Having covered Germany for years and years and years, I have to say it's the first time the German government has really surprised me with its spending plans. This is just an indicative chart. So we took the IMF WEO GDP forecast and didn't adjust them at all, but we just looked at debt to GDP based on the increase in spending that's been put forward and partially legislated by the German government. It's a lot of defense spending, which will provide a kind of quick sugar hit to Germany's economy, but has relatively low multipliers. There's also a lot of infrastructure spending, which should come to bear in the medium term and has much higher multipliers. And so this could be a source of significant stimulus in Germany. And then also the EU's talking about its own spending plans, particularly around defense. So that could change kind of the environment around the UK as well, and could offset some of the implications of US tariffs. But all to say, this is highly uncertain. And these are the kinds of things that we're looking at on the MPC as we're trying to make forecasts and set policy to bring inflation sustainably to 2%. I'll finish my comments there.
So much. Fantastic and very, very comprehensive. You did offer that we could talk a little bit more about the tariffs and how they might work through. So I'm going to take you up on that offer. Particularly, maybe thinking through the different time horizons. You know, can you see that in the short term, it might be a demand hit, but then as we're all trying to turn inward, recreate our own industrial base, does that then see demand pick up? Is it sort of disinflationary short term, but adds to medium term inflationary pressure? I guess that's kind of how I've thought about it. How do you sit on that?
So it depends on what the tariffs are and how countries respond to them. Actually, given the UK is a small open economy, it really matters how not only the UK responds to them, but how the rest of the world responds to tariffs as well. So that's a directional shift. If you have tariffs that are widespread, so we just actually took a very stylized example and looked at the countries that President Trump had threatened to impose tariffs on during the campaign. Some of those have already come to fruition, some of them won't, but we'll see. So if you assume that the UK also retaliates, as do all of those other countries, then there are a bunch of different channels. Obviously, imposing tariffs is inflationary up front, but then you also get a lot of trade diversion. This is partly why we use the ECB's model, because they incorporate trade diversion into it, which means that other countries that used to have a big market in the US might need to find another market, and they might do so by discounting things. And so that could be disinflationary and could happen fairly quickly. The exchange rate piece I mentioned, not only because I think that the model has somewhat unrealistic expectations for how quickly that propagates, but also because it doesn't include considerations about how the dollar has been the global currency. Dollar assets are a safe haven asset, so that certainly sets the US dollar apart a little bit. So we expect that if you actually had retaliation, you'd see the sterling appreciate relative to the dollar. That might be limited because there might just be safe haven, a flee to safe havens in dollar-denominated assets. That said, it's also possible that the dollar's role as a global reserve currency could be undermined a little bit by all of the uncertainty that we're seeing. And so we don't know how the exchange rate will behave. And that's a key way that this all propagates through the economy.
Got it. Thank you for that. Could I ask you to go to your headline and core inflation chart? And I was just going to ask you, you talked about the difficulty of separating out demand factors from supply factors. So I just want to check I understand how we might do that in how this chart plays through.
Yeah,
there it is.
Yeah,
there we go. So I guess anybody just eyeballing this chart would note that in the last hump, the orange line followed the aqua line. I can't say aqua as beautifully as you do, by the way. I enjoyed the way you said that.
The only time anyone said an American accent was beautiful. But
you admire our British accent, we admire your American. This time around, obviously, you've got a hump in the aqua line, but the orange line isn't really following it. If you started to see that happening, would that make you slightly more worried about this supply side overwhelming the demand side? I guess it could also be indicative of your other risk of inflation expectations de-anchoring. Is how those two lines move through time a pretty big indicator for you of the result of some of these theses?
Yeah, so it matters because lots of people pay for energy and food. So food and energy tend to be really salient for people's inflation expectation setting. That said, we don't have them diverging as they had in the past, in part because the uptick in the aqua line is not just driven by energy effects. It's also driven by regulated prices, one-off things like off-watt. There's a bit of the increase in NICs in there. And so it is a bunch of things, many of which should actually be temporary, so not repeated. And so we don't expect to have kind of second round effects as a result of that.
Got it. And then maybe on your wage growth chart, as you said, there's some quite encouraging signs that your agents and some of the other sources you're using are pointing to it going down.
Yeah.
In terms of how we think about that transmits into inflation, do we need to sort of have in the back of our mind that on top of that wage growth, we know we have this cost to employers from national insurance, and therefore, do we need to, we've all been very focused on wage growth, do we need to now switch to unit labor costs to remind ourselves of factoring in all those other aspects to think about what the inflationary pressure is?
Yeah, so wage growth isn't a problem as long as you have productivity growth.
Yes.
And productivity growth is supposed to be really slow moving. Most economists ignore it on a general basis because you need to see 10 years of productivity growth data to really believe in the shift. But we've had a series of supply shocks in the past couple of years. And so it is possible that we just have more supply issues than we're used to having. And so productivity growth might move around. So you always have to look at unit labor costs. And wage growth used to just be a rough and ready measure for unit labor costs because everybody ignored the productivity growth piece of it. I'm worried about productivity growth on the downside. So I do think that's relevant. But another thing to mention is that we're in a very different environment now than we were coming out of the pandemic, in that the labor market was tightening then, it's loosening now. Firms repeatedly tell us that they don't feel like they have the room to pass through higher costs onto end users. You know, activity has been weak for a long time. Firms talking to our agents had been saying, well, consumption's weak right now, but we expect that it's actually going to strengthen going forward. It seems like that second bit, the strengthen going forward, is starting to fade from the narrative a little bit. So firms are even more worried about passing higher costs through. So we look at wage growth in part because it is a big component of domestically generated inflation, because it affects wage setting behavior. But if firms can't actually pass on that cost, they can only allow it to eat through into their margins for so long, then we might not see wage growth feed through into inflation the same way that we did before.
Okay, final question for me, and then I'm going to open it up. So get ready with your microphones. On productivity, in the US, we've had this seemingly post-pandemic, this real nice bounce back, because productivity has been elusive everywhere. But in the US, we have seen that big bounce back after the pandemic that we haven't seen across Europe. Do you think that is genuine productivity? Because of course, productivity is just when you get busy and you don't have time to find new staff, I always think. And so is it just that, you know, that as all those other charts that you showed where our consumption hasn't bounced back, we just haven't had the demand bounce back, but the US had that, you know, post-pandemic party. Is it true productivity over there? Is there anything we can learn from what's going on just to try and get our productivity, that secret sauce, going here?
Yeah, so...
Sorry, a bit off topic. I appreciate that wasn't...
Okay. I mean, I spent a lot of time looking at UK productivity growth and US productivity growth and comparing them, also the Eurozones. If you talk to people who spend their entire careers on productivity growth, they will look at the improvement in the US and say, like, give me 10 more years of that track record and I'll buy it.
Okay.
But otherwise, it's a bit too early to say.
Okay.
And I think that's probably fair. You do have the center of gravity of tech in the US, really, so that could be feeding into some of the productivity growth data. The Eurozone hasn't really had much productivity growth. The UK looks a bit in between, but more like the Eurozone from a productivity growth perspective than the US. But this isn't just a post-pandemic dynamic, this is a post-financial crisis dynamic. So this is long-standing. Productivity growth heals all economic wounds because it boosts potential growth. So it is really sort of the golden goose that all economists want to discover. We just haven't figured out on this side of the Atlantic how to drive it forward. It's really tricky, but I wouldn't get so caught up in the hype of US productivity growth since the pandemic. It generally has been higher than in Europe since the global financial crisis.
Got it. And we all hope that AI and all these things are going to be that secret sauce. Okay, I'm going to take 3 at a time. If I could ask for the questions to be quite concise, because we are limited in time. So first, Janet, lovely Janet Henry from HSBC. I'll do the introduction for you. She was my old boss. I think you just go, Janet. We're that technologically capable. Yeah, try it. Is it?
It's on.
Yeah,
you can hear me. Thank you very much, Megan. Excellent presentation, and just that whole list of uncertainties. I can't imagine how challenging it is to be a policymaker. I just wanted to pick up on one of Karen's question regarding inflation and obviously your thoughts on inflation expectations, but also the supply comments. I mean, this is an extraordinary world that we are in at the moment. We wake up every morning to see what X has published, or indeed what comment has been heard on the other side of the world. So really my question is about how policy setters should think about the world as it comes through. On your wage chart, well, there it is. There are 7 different surveys regarding what the labour market is telling us. And when we have come after such a period of elevated inflation, obviously we've come a long way from where we were. Does that mean, particularly, I guess, for the Bank of England, maybe the ECB, central banks, where it's all about price stability rather than a dual mandate, actually you should just really, really wait and see for the hard data, always veer towards the side of caution, rather than trying to set policy, because it's such an extraordinary world of so much uncertainty. All the central bank has is their policy credibility. And it's all about anchoring inflation expectations, even to the extent that we can even measure them at all, because there is no perfect.
Yeah, but that was me boasting about our technological capabilities just in time. I think so, Janet. There were 2 aspects to that, and I think I will go straight to you and then collect up some more. Like, I think partly a signal and noise, like how do you distill, and then also the point about how can you be particularly preemptive when there's such a constant news flow? How can you provide that vision to anchor expectations, or does it just naturally force you into a more reactive? Is that good? Yeah,
broadly speaking.
Yeah, so inflation expectations are tricky. As you say, they're really hard to measure. There are many different metrics for them. How do we know when to start worrying about inflation expectations, I think was the beginning part of your question. And for that, we look at kind of historical experience, particularly in the UK, but also in other countries, to see whether they've risen either within the bands of what we can explain or within the bands of what we've experienced previously. And so far, there aren't red lights flashing on that front, but of course, they've been rising for 6 months. We're a bit worried about that. Part of the near-term hump in inflation that we're forecasting is driven by food prices. And as I mentioned, food and energy are particularly salient in inflation expectation setting. We're also looking at how people are setting inflation expectations, because if you walked outside and asked people what they thought inflation was today, most people wouldn't actually know, never mind where they think it'll be in 5 years. But we do know that households are looking further back in their expectation setting. So they're not just looking back to a year ago, they're looking back to before the pandemic, for example, and that's informing their vision of inflation expectations. All of this matters in terms of how this feeds through into wage and price setting. And as I mentioned, I think we're in an environment where that's going to be tougher relative to when we had just reopened the economy. There was a massive shortage of labor. People could kind of name their price based on their own inflation expectations, and that had second round effects. This time around, I think that's much more difficult. So it's something we're watching for sure, but it's not something that's flashing red lights at this point. So I think inflation expectations still are anchored. In terms of how we make policy amidst all this uncertainty, anyone who's watching our communications very closely will note that we've set up these kind of different cases of the world. We're looking into kind of different scenarios, particularly when it comes to government policy anywhere. We don't bake it into our forecast until it's been legislated, but that doesn't mean we don't talk about all different kinds of eventualities and how that might flow through into the UK economy. So a lot of it is talking about things in the risk space and seeing how that might affect your own forecast. Of course, it takes a while for monetary policy to actually kick in and feed through financial markets into the real economy. And so this all has to be based on some kind of forecast, because whatever we do now will only hit the economy in a year and a half, 2 years' time. So all of these risks are informing each of our views on what the forecast might look like, and therefore how to set policy appropriately.
Super. Right, we've got one more. If I could have a hand, lady here in the center.
There we go. I hope this works. Yeah, just to reiterate, that was really interesting. Thank you so much. I just wanted to ask more about the public-facing aspect of all this. So I think most ordinary people, you give them a forecast, and you can explain to them what confidence interval you have, but they just hear the number, and often that's what makes it into the headlines. So how do you think that economists can better communicate the effect of this uncertainty on our modelling, especially in the face of a lot of anti-intellectualism, where people think economists are just really bad at their jobs?
Yeah.
Good question, sobering question.
Yeah, it's a great question. So you always have to consider your audience. And I guess I end up speaking to quite varied audiences. So I'm here today, but I was on an agency visit talking to a bunch of kind of charity people who run charities. So third sector parts of the economy. I also speak at schools. I do media where that gets transmitted. And so considering your audience is important. Often I have to communicate with all of them in one go. And so I think they're kind of trying to strip technical wonkery out of what you're saying and contextualize things really help. So the numbers aren't generally that useful, but explaining, well, here are some reasons why we think this might go up, but here are, other reasons why we think it will come back down is more useful than saying in Q3 of this year, inflation will probably be 3.7, which, forecasting is a difficult game. So 3.7 might be, but could vary from that. So I guess just providing your thinking on this kind of stuff, in the language that you guys will understand, explaining our reaction function is probably the most useful thing without using phrases like reaction function.
Right, we've run out of time. I think we could have spoken to you all day, Megan. Thank you so much for taking the time to come and speak to us this morning. Maybe you could join me in appreciation. Right, I'm going to turn the floor now to Almudena. She's the godmother of the network. I don't know the founding mother of the network, chair of the Women in Economics Network, fully deserves her new accolade, of course. I think we can give her an additional clap for that. Obviously, professor at the LSE. So over to you, Almudena, for thoughts on what the network's up to.
All right, okay. Well, thank you very much, Karen, for such a lovely introduction. And thank you, Megan, for such an inspiring and informative talk. So my name is Almudena Sevilla, and it's great to be here today. We set the network 3 years ago, so this is our third annual event. And since then, the growth has been exponential, which in a sense is sort of, I'm happy about it. But when I started thinking about this initiative, I thought that we had already made some progress. And what I realized is that there is so much more work to do still. So anyway, it's great to see all this energy here today. So what I'm going to be talking about today is what the journey has been, what we've done, the sort of things that you would expect from us as women economists, and give you a sense of where we're going. And of course, I'm very willing to hear your thoughts on this as well. So why this network? We set this network to support the career development and the representation of women, not just in academia, as had been traditionally the focus of the Royal Economic Society, but across all the sectors, because there are women economists in finance, women economists in tech, women economists in the government economic service, and it's been a long time since women have been studying economics to the same numbers as men, but women economists fall down the pipelines, especially at senior levels. So that was the great sort of motivation for the network. So we, with that sort of mission, we structured the network in 4 different initiatives. And the leads of those initiatives are with us here today. I can see some faces, and I hope that you have a chance to talk to them during the networking session to learn more about each of these initiatives that you have in front of you. So one of the key goals of the network was to bring women together, women in economics, and this is what we're doing here today. So this is our annual flagship networking event, which, as I said, this is the third networking event, so the 3rd year. Then the second sort of initiative is the support initiative that is tailored to more junior women in economics to help them progress in their careers. And the 3rd initiative is the Inspire initiative. So that is targeted to women that are studying economics in the university, and we want them to really make them stay in the profession, because that is the other thing. So women finish an economics degree and veer towards a non-economics sort of position. And the 4th one is about action. How do we change things? And here we do peer learning sets where groups of women get together to discuss a particular problem. For example, we're going to be talking about promotion, and to see how they can actually bring about change in their organizations. Another thing that we've been quite successful at is the expert panel series, and the aim of that initiative is to give visibility to all the research and to all the work that women economists do to amplify voices of women in economics. And of course, we are very active on our social media, and we have a whole communications and partnership strategy underpinning all those 4 initiatives. So that is, in a nutshell, what we aim to do and how we aim to achieve those goals. So here you have some highlights of recent events this year. So the first on the left is the Career Conversations event that we held at the GES, at the Treasury, and we had Rachel Reeves come and, well, she didn't come in person, but she joined us online and gave a really inspiring speech about why we need this kind of initiatives, why it is important that we hear all voices in economics. The second top on the right is the expert panel series that took place at Vanguard. We talked about pensions, we talked about an aging economy, and we talked about the consequences for women in particular, who are generally living longer, but arrive to retirement with fewer resources because of the choices that they've made throughout their life cycles. And of course, the macroeconomic implications as well. And then at the bottom, we have the inspirational talk. I think this was in Birmingham City University. This was with a bunch of students. All of our events are, well, right-hand side, the newsletter. So, you know, for International Women's Day, we had a really packed up newsletter with a lot of information. If you haven't signed up yet, please do after this event. So just to give you a sense of how far we've come in just 3 years, where that we have been active. I mean, there are lots of different numbers here, but generally what this is showcasting is we have over subscriptions in all of our events. People are coming not just in person, but people are joining up online in great numbers. So this is not just about getting together and doing some networking. There is really some need to learn about what the profession has to offer for women and how you can thrive as a woman in the profession. You can see the high profile events that we've held with the Bank of England, JP Morgan Asset Management, Vanguard. So we have a lot of institutions that are really behind all this effort, joining us in our mission. And of course, we have quite a bit of followers in our social media platforms and our newsletter. So we have achieved, we have been able to reach a lot of women in the profession in a very, very small period of time. So I think that's really been amazing to see. So just you know, what you think or what people think, what women think when they come to our events, women and men, because I see some men in the audience, and we shouldn't forget that this is a joint effort. This is not just about us. This is about bringing talent to the profession and maximizing that talent, and that is good for everyone. So the events seem to be coming up as something that people take a lot from, and great women discussion. You can get a sense of what the takeaways are. Of course, and I mentioned before, but I have to say it again, this really wouldn't be possible without the commitment from our UK WEN champions and our event partners. And given the current situation, this is even more important nowadays. And it is this commitment and this support for our mission that is really making all this happen. So I cannot emphasize enough how important it is that organizations that believe in diversity, equality, inclusion, and in talent and bringing talent step up and you know, support us. Okay, so as Imran was saying before, this is UK WEN is part of a wider strategic direction of the Royal Economic Society, and I just wanted to take some time to introduce you to some of the events you may be interested in attending. So the first one is Girls in Economics. It's going to happen on the 8th of April, and this is organized by Discover Economics. And I think Sarah Smith is here in the room. She's going to be talking later. She was the founder of this initiative, and if you're interested, please talk to her. And the next career event, for those of you that are more junior in the room, or if you are more senior, you may want to pass this on to your more junior colleagues. It's happening at the LSE on the 21st of May. So all the information is on our website. Please go ahead and have a look. So what are the opportunities for all of you that are interested in our activities, and for both senior and junior? Well, as I was saying before, this couldn't happen without our champions. So consider becoming a champion and come and talk to me afterwards, or one of the UK WEN steering group members to discuss how you can get involved in that in becoming a UK WEN champion. We also have a jobs board, and that goes, that has a big readership. So if you are, as an organization, interested in recruiting talents and women in economics, do use the job board. And of course, do join the mailing list and follow us on the different social media platform. You have there as well Adam Bryan, who is our partnership person at the Royal Economic Society. I always get the titles wrong, but anyway, Adam is here today. So if you want to talk to him about how you can partner up with us, do so. Okay, so I think that was all for me. So yeah, I kept to time, which is unusual. But please do come to talk to me after, during the break, and also, to the different people from our network who are here today. And thank you so much. Thank you, Karen.
Okay, so this is a panel session on transforming promotion practices to support women economists. And I'm very pleased to welcome our distinguished panelists. The aim of the panel is to really identify barriers to promotion for women in organizations and try to start identifying solutions. And I'm very pleased to welcome our distinguished panelists. Sarah Smith, on our far left, is a professor in economics at the University of Bristol, who has done extensive work on diversity in economics. She is a co-chair of the RES Discover Economics campaign, which seeks to create increased diversity among economic students. She was awarded OBE in 2022, as well as the RES Medal of Service to Economics Profession this year. Sharon Bell, on our right, is a senior European equity strategist at Goldman Sachs. She has written extensively on womenomics, and is co-chair of the Global Investment Research, Inclusion and Diversity Council. And in our center, Liz Bennington is Deputy Director North of Department of Business and Trade, and she leads the important task of driving up exports and inward foreign investment in the north of England. So we'd like to start our panel, but Victoria, how are we doing? 2 minutes, okay. We have a little surprise for you today, and we are just waiting for our surprise guest to arrive. But perhaps while we are waiting, we can perhaps start with a short introduction from all the panelists. It would be great if all of you could say very briefly about your current role and how you got to your current positions.
Thank you. Yeah, I think I'm starting aware that we might just be about to be interrupted. Yes. But yeah, so thank you. So yeah, so I started my career outside academia, or at least on the in between academia and policymaking, Institute for Fiscal Studies. I spent some time at Treasury and at what was then the Financial Services Authority before moving into an academic role. My first academic role was actually not in economics, it was in Department of Government at the London School of Economics, and I was working on a new Masters in Public Administration program. And I then moved to Bristol. Goodness, it's now nearly 20 years. I can't believe it's been that long. And I've sort of experienced internal promotion twice at Bristol, and I was also head of school for 7 years. So I sort of was sort of seeing promotions sort of from the other side. And I've had roles at the Royal Economic Society on the Women's Committee, and I'm currently co-chair of Discover Economics, which where it isn't the focus, but I do want to plug. Next week, we're publishing a report on how to attract girls into economics. Lots of interesting research on girls' perceptions of economics, and also we'd like to start a conversation about what we can do to challenge those perceptions. Just a quick kind of personal reflection. I think it's great that the focus is on promotion practices. I think we've talked a lot about mentoring and about role models, and we probably haven't done enough to critically examine and challenge the processes that are in place. I'm having experienced the promotion practices in academia, I think they're probably a sort of, HR nightmare. there's a heavy element of subjectivity. So in the promotion practices within universities, it's a kind of a committee of peers who vote, sometimes anonymously, and have a sort of very personalized discussion. And there's a lot of weight put on subjective reference letters. And we now know from research that those reference letters tend to be biased against women, and the language used about women in those reference letters tends to be different. So yeah, and I think in that situation, we also know that women's contributions to joint work tends to be discredited, and that can only really happen in a much more subjective environment. So if a woman co-authors a paper with a senior male, that paper counts less towards her promotion. And I think the practices of the promotion process have a lot to do with that outcome. And the second thing is also, in academia, we put a lot of weight on a very narrow subset of the activities that I think the institution values. So actually, I'm going to plug someone else's book, but this book about the No Club, which makes transparent the disproportionate share of non-promotable tasks that women do, and the fact that they are not sort of taken into account in the promotions decision, I think may have a lot to answer for. So perhaps we can come back to that in some of the conversation later. Thank you.
That's a great book, actually. So Sharon, perhaps you can tell us a bit about, how you managed to get to the MD position, which must have been very challenging in a very large global investment banks. Could you tell us a bit about
and they're a competitive environment too. Hopefully not such an HR nightmare as academia, but maybe, I don't know. Yes, I've been at Goldman Sachs. I work in macro research there, and I've been there for 23 years this year. Prior to that, I worked at HSBC also as part of macro research. And my main focus is equity markets. I'm an equity strategist there, but not looking at individual companies within the equity market, but looking at the broader equity market and thinking about movements within the equity market as well. And my main clients, I suspect many of them are in the room, pension funds, institutional investors more broadly, hedge funds, insurance companies, asset managers, wealth managers, sovereign wealth funds, etc., are my main clients, but I also speak to the media, speak at events like this, etc. So, and yeah, my main focus is European markets. And I've recently written, for example, on the topic du jour, certainly it will be tomorrow, which is Trump and trade and tariffs, and what this means for markets, etc. And it's funny, it's interesting you say that women do a lot of these additional work, which is, I consider that my day job. And then this type of thing is almost a little bit of a side hustle in all of this, promoting women, thinking about women. I've written a lot on womenomics as well, a franchise I took over from our portfolio strategist in Japan, actually, Kathy Matsui, who originally coined the topic. But it's become much bigger than that. It's got me speaking to policymakers. It's given me a lot of advertisement. So I think even those areas that I consider that way have actually given me an opportunity as well. But yeah, that's my main focus.
Great, thank you. And finally, Liz, could you tell us about your important work of driving up north of England?
Yes. Hi, everybody. It's great to be here. It's so interesting to hear all these different roles that people perform. So I'm not an economist, but my job is to drive up the economy to economic growth. And it's currently in the north of England and soon to be across the whole of the country because we're moving around a little bit. So I'm really interested in leadership generally, and women in leadership has been the kind of a theme throughout my entire career. I started off, on the other side, I don't do lots of research, but I use a lot of data and a lot of economic modelling from our analysts, currently in the Department of Business and Trade, where I'm a deputy director. And initially, when I started out as a graduate leadership person on the M&S graduate leadership scheme after I graduated, I was an international buyer across global markets, managing global supply chains across the world, using lots of data to understand and anticipate trends, behavior, purchases, and basically to drive up the bottom line. I moved from that when my son was tiny, because I didn't want to be traveling all the time, and I was coming out of meetings in different parts of the world to say good night in different time zones. And as a single parent at that point, I would have had to have got a live-in nanny. So I decided I was going to retrain completely and went into teaching, became a senior leader in comprehensive schools in the northwest of England, having lived in London for the kind of first part of my career, really. And that was a complete eye-opener, completely the making of me, teaching, going from business class, flying business class around the world, standing in front of year 9 with sweat trickling down my back, thinking, oh my God, how do you teach these children? It was a very different character building experience. I progressed through public sector, totally different from the private sector, so it's interesting hearing both of your perspectives. Even in fashion, where I worked in M&S, Monsoon and the Arcadia Group, and later on at Matalan in the Northwest, it was women buying fashion. I was a women's wear director, but the board was all men, and I had to sign off women's ranges, women's wear ranges that sell millions and hundreds of millions of pounds worth of budget, that the men had to sign it off. So it was really interesting. I think that is pretty much still the case as well. So moved into the civil service, did the talk for about 7 years, and loved the public sector, wanted to do more strategically in policy making, so moved into apprenticeships, where I worked now in central government, and I was there for 4 years, all through COVID. Fascinating time, getting to work across with Cabinet Office, Treasury, Number 10, on some really interesting policies which were modelled and worked through, because they were all brand new, groundbreaking things that we had never done before in COVID, with our economists and analysts. And it was I mean, I'd be completely lost without that data and modelling. And now I saw this job advertised in international trade, so I have gone right back to where I began, in M&S, in international trade. So that's my career. I'll talk a bit later on about senior women in the Department of Business and Trade and the civil service. It's very, very interesting, and great to be here.
Great, thank you. Well, while we wait for a surprise, I should introduce myself as well. I'm head of research at the Bank of England. I'm also UK Women in Economics steering group member. I've actually, worked with Almudena from the start. It's been a great experience. But I also lead the research function in the bank. So I am head of division of the Research Hub, which is the core research function of the bank. But I'm also responsible for all the research functions across the bank. The bank's researchers are scattered across the organizations, and we publish our research, disseminate our research through a blog post series, and we really do research to make sure that our research is both impactful for internal policy as well as for external policy debate. So that's what I do. Victoria, are we ready? All right, great. So we have a little surprise for you. And I'm absolutely thrilled to welcome the Right Honourable Rachel Reeves, the Chancellor of the Exchequer, and our first woman Chancellor in history of the United Kingdom. Rachel, thank you so much for being with us, by taking time out of your very busy and important work of navigating the UK through a challenging period. We can't think of a more fantastic role model and supporter for UK WEN. Welcome, Rachel.
Well, thank you very much for that kind introduction, and it's wonderful to be here with all of you today. As has already been said, when we were elected into government last year, and when Keir appointed me as Chancellor of the Exchequer, I was the first woman in 800 years to do this role. Far too long, but it's great to have finally smashed that glass ceiling. And like many of you in this room, it certainly feels good, doesn't it, when we break those glass ceilings. There's still some in economics to break, though. When I took the role, the first speech I gave was in the Treasury, and I said in that speech that along with the privilege of being the first ever female Chancellor of the Exchequer, also comes with it a great weight of responsibility to pass on to our daughters and our granddaughters a fairer and a more equal society, and to show all of them that there should be no ceiling on their ambition and nothing that they can't achieve if they put their minds to it. And that's why I'm so pleased to join all of you today, because of the pioneering work that all of you are doing in what is sadly still an incredibly male-dominated field. Now, I remember when I first started studying economics 30 years ago now, when I started my economics A-level, and I had an inspiring teacher, Mrs. Algio, and she's the person who taught me a love of economics, encouraged me to study economics at university, where I wasn't taught by any women, and then later to become an economist. And I expect that many of you, if not all of you in this room, will also have stories of women who have inspired you, but also all of you in this room would have inspired other women through the journeys that you've taken. Because I expect, like me, when all of you started out in your careers, there are a lot fewer women role models than there are today. And all of you in your fields, whether that's in academia, in government, in the private sector, are role models to so many women coming up through your organisations. But we all know that in economics, as in wider society, but particularly in economics, there is still a long way to go until we achieve that gender parity that I know all of us want to see. Economics is still one of those subjects that at universities, whether it is people studying undergraduate, masters or PhD, or indeed the professors at our universities, are still incredibly male dominated. And we need to do more to ensure that there's a pipeline of talent coming through the system, but also crucially that we retain that talent, because we know that too many women are still dropping out of the profession and dropping out of the industry. And so I want to work with all of you to ensure that more young women are studying economics, staying in the subject, whether that is in the public or private sector. But also, as Chancellor of the Exchequer, I want to ensure that women in our economy have every opportunity to fulfil their potential in whatever career they go into. And today we were able to fulfil one of the promises that my party made in the election campaign to increase the national living wage and the national minimum wage. Now, for me, that was one of the proudest achievements of the last Labour government. It lifted so many families out of poverty, but particularly women out of poverty, because women are still more likely to be paid the living wage or the minimum wage compared with men. And so today, 3 million people got a pay rise of up to £1,400 a year if you work full-time on the national living wage. And that is just one way in which this government is trying to ensure that women in whatever part of the economy they work, whatever contribution that they make, that they should have the dignity and security that should come with work, but for too many people, and particularly for too many women, is still absent today. So whilst we focus today on the progression of women in economics, I also want us to focus on the progression of women in the everyday economy as well, and the contributions that they make, but also the contribution they get for what they put in. So I hope, for however long I am in this role, that I can show women that there's no ceiling on their ambition in the same way that you do every day. And I look forward to continuing to work with you to ensure that more women see what we do, which is the wonder of economics and the difference that economics can make to people's lives, whether that's in the public or private sector. And so to those of you at the Royal Economic Society and the Women in Economics Networks, thank you for everything that you're doing to inspire people every day, and I look forward to continuing to work with you. Thank you.
Thank you very much, Rachel, for coming to support us. It's been great honor to have you here in this room. Now, let's go back to the panel, and thank you very much to all the panelists for your flexibility in various schedule adjustments.
It's going to be difficult to follow.
But perhaps we can just start with academia. Academia is where everything starts. You know, you create the pipeline of women in economics. So perhaps you can start with you, Sarah. What are the remaining barriers you see in academia for women's progression, for girls studying economics, and what can be done about them?
There are two issues there. One, creating the pipeline. Actually, I think it starts in school, to be honest, rather than at university. So, you know, universities, you don't have to study A-level economics in order to study economics at university, but that is the main gateway into studying economics. You know, so most people who study economics at university will have studied it at school. If it's not in your school, and that's a real problem, the lack of economics in about half of all our state schools is a massive problem. But I think, so I think if you haven't studied economics in school, you tend not to kind of think about studying it at university. So giving you the headlines from our report next week, I mean, girls definitely regard economics much more negatively than boys do. I think it's three things. One, it's the perception of the subject itself, that it's about money and not people. It's the perception of economic students. So yes, they're aware that economic students are male. That in itself doesn't seem to be a problem, but actually I'm afraid they see economic students as a sort of particular type of male who is opinionated, clever, arrogant, and competitive. And I think that is a real problem, and that really puts girls off. And the other thing is they don't see the range of career options that you can have as an economist. So young girls want to travel and they want to have flexible jobs. And interestingly, they don't see that that's what economists do. So I think that's actually something that we can kind of address through better sort of careers information. But in terms of the pipeline, I think we've got quite a long way to go in terms of trying to attract girls. They love psychology as well. That's the other thing. So, you know, maybe, you know, sort of the kind of a broader, emphasizing a broader curriculum, you know, and telling them exactly as Rachel said that, you know, economics is really about changing people's lives. You know, we need to get that message out there, and it's fantastic to hear it from her. At university, and I just realized probably I shouldn't say university process, Rachel's nightmare. They're also getting a lot better, I think. You know, actually having been in academia for 20 years, you can see that there are huge changes that are taking place, and I think that is all very positive. So, you know, I think the sort of systematic attempt to make promotion processes much more, much kind of like broader, and to acknowledge the very wide range of activities that women sort of do, or and that universities value. You know, I think this whole kind of debate about non-promotable tasks, or this kind of open discussion about non-promotable tasks, I think is very interesting. So, you know, I think as we heard before about the glass cliff, having the evidence, I think, is super important. And I think we now have evidence that whether it's kind of the private sector, the public sector, or academia, women tend to do many more of these non-promotable tasks than men do. So what are non-promotable tasks? Yes, it's the DEI stuff, but it's also, you know, the kind of the other, you know, like the recruitment committees, or, you know, organizing the sort of social stuff. I mean, it kind of goes beyond supporting other women just to kind of like making departments and universities and offices kind of function better. It's actually kind of essential work, which I think all these institutions would value. But yet that type of work hasn't really been kind of like acknowledged and valued in the way that it should be when it comes to kind of like promotions. So in universities, you know, the promotable tasks are publishing, and in economics, it's actually sort of publishing in quite a narrow range of journals. So your main incentive is just to kind of like be very focused on that kind of very narrow range of activities. But women tend to probably put more, you know, maybe they kind of act differently with regard to their teaching, and they also tend to get burdened with a lot of these sort of non-promotable tasks, or sort of take on these non-promotable tasks. So one of the really nice things about the book, it also dispels any myth that women prefer to do this kind of activity. I think it's sort of, the situation arises because people expect women to do it, and so women then sort of feel like more obliged to do it. So in a kind of lab experiment, you can kind of take out, you know, is it because it's a fun task? Is it, you know, because women sort of have greater skills in doing it? No, it's just because everybody expects women to do it, and with that expectation, they do it. So, you know, we want to move away from that equilibrium, and I think we can do that in two ways. One is to sort of recognize this unequal burden of non-promotable tasks. So women can learn to say no politely and firmly, and suggest that their male colleagues might be suitable for these tasks too. But also perhaps we can make these non-promotable tasks promotable. You know, they are valued by organizations, I think. And so actually recognizing the non-promotable task as valuable to the organizations, I think, would be another way to kind of address this unequal burden. So just one final anecdote. I did have a discussion with the provost at Bristol. So, you know, if you're a senior female academic, you get asked to be on most recruitment committees because they need a female academic. And so I pointed out to her that what female academics were just as biased against other women as male academics were. So I wasn't really serving any purpose. And also it was taking up quite a lot of time. she just said, you know, she would just carry on with it. You know, I think it's very hard to kind of move away from having women on those committees, but you are then caught in the situation of spending a lot of time on an activity which isn't helping you and and in that case, you know, isn't necessarily addressing the underlying problem.
Yeah, I think the notebook is a great one. And I think the key challenge that you raise is really, you know, these tasks are very important to create a culture in workplace that are inclusive and diverse. At the same time, it places a lot of burden on leaders, and they are not necessarily rewarded for that. And I'm just turning to Sharon. Sharon, how do you see yourself as a leader in these organizations, and what can leaders like you to promote more inclusive and diverse workplace and industry in a sector like yours?
Yeah. So, I mean, I work for an investment bank, and they're probably not known as the most inclusive places and diverse places. I mean, obviously, we're trying to change that. And if you look at the junior level, I was interested in Sophie's earlier chart that showed at the junior level, we have a great deal of diversity, but you see that kind of slim down, let's say, as you get to the more senior echelons. I think some of that, to be fair, is a little bit of time. When I started in the industry in the mid-1990s in my graduate cohort, there was only a third woman in that cohort. So is it a surprise now that there is only 25% or a third women at the more senior level now? So I do think some of it's a little bit of time, but it isn't just that. There are obviously biases. There are things that are set against women in particular. And I think this point about both at kind of home outside work, having so much in the way of kind of unpaid for tasks. You see this, and I've got a great chart in one of my presentations that shows it's true across every culture. It's differences in different countries, but you always find that women are doing more unpaid work than men outside. So and it was interesting, this point about even when women become senior managers, they're doing more unpaid work at home as well, much more so than men. So how can they possibly compete? So I definitely think all those structural differences are there. Now, what do? I mean, I'm in a fortunate position of being a research analyst, so I can do some research and publish research, which I've absolutely done. I took on the Womenomics franchise, which was something created by, as I said before, a colleague of mine, Kata Matsui, in Japan many years ago. She pointed out that if only we closed a little bit the gaps for women in Japan, which were massive at the time in the late 1990s, this would make a huge difference. And actually, in her case in particular, some of her ideas influenced Abenomics, and the policy response in Japan actually changed. So I think if you publish research, you've even got a chance of influencing policy. Books, research, etc. Can certainly do that. So I try and do that, but then also maybe at a bit more small scale, I'm trying to role model. I think just by being a woman leader, you're automatically a role model. Try to role model, sponsor, mentor, etc. The next generation coming through. But I also, just on a really small scale, what I try and do as well is make sure that I, as much as possible, are treating the men and women the same, particularly when it comes to things like, oh, I've got this task, which is more administrative task. Think about a man to do that, for example.
Do you have a question for speakers? Please do so by typing, using the typing option at the bottom there. Thank you.
Find is very, very important too, is when I know that a junior colleague, he is, and his family are having children, I often say to him, what are you doing for parental leave? What are you doing for childcare? What are you thinking about for these things? Just like I would a woman who I saw was pregnant, I would make sure that I'm having exactly the same conversation with the man as well. And you know, I find that they want to have those conversations actually. And it's interesting when I say, what are you doing for childcare, not what your wife or partner is doing for childcare. So again, it's the language we use, it's the questions we ask people, it's the opportunities we give people as well to speak up in a meeting or to do this particular task, etc. So I try and model these things at a very micro level. And I'm also aware super of my own biases. It's interesting that Sarah said, you know, I'm on this committee, but it doesn't necessarily mean that I don't hold biases as well, just like everyone else. And I find exactly the same thing. I was writing on Womenomics and I was in the train reading the newspapers a few years ago. And this was when the Prime Minister of New Zealand was a woman. And she just got married, but there was a lovely picture of her and her husband just getting married. And it said underneath, Prime Minister of New Zealand gets married. And I thought, oh, it's a lovely picture. And look at his lovely wife. And then I thought, oh, when I read the article underneath it and realised that actually it was the woman. And I was there writing on womenomics at the time. So I absolutely, we all have these biases. So I automatically thought the leader was the man in the picture. Everyone does. And I think it just, again, trying to live day to day and trying to accept that I have biases and shift them as much as possible.
Yeah, I think as much as a manager, you have to think about allocation work, how you treat different people. In the same way, I think it's also important to challenge your own boss and say, well, you know, why are you giving it to me? You know, have you thought about that male colleague of yours? But anyway, let's turn to Liz. I think civil service has been doing quite a lot in change in the workplace to support women. What has been key progresses, and where do you see outstanding issues?
It's not massively different from what Sarah and Sharon have been talking about, to be honest. I think it's, in terms of stats, in Department of Business and Trade, where I work, there are about 7,000-ish people at the moment. And in senior roles, so in the first level of senior roles, like deputy director, which I am, the split's okay. It's like 48%, which is pretty good. You get to the next level, and that goes down to 35%. And then when you look at the most junior roles, the entry-level roles, the highest, the lowest, most junior entry role is, I think it's 64% female, and the second most junior role is something like 57%. So it's a really, you know, that's how we're still very much sort of populated. And all the things that we've talked about are taking place, you know, the recruitment, having really balanced and diverse recruitment panels, and focusing recruitment around the applications and the interviews around specifically essential criteria, and sort of blind recruitment, and, you know, so you really, you know, as kind of neutral as possible. I don't know how effective that is. I think it has improved slightly. I don't think it's improved as much as it should have. Also, the flexible working stuff, I don't know what it's like in the private sector, and we were talking about this earlier, weren't we, Sarah? It's, you know, that really, really helps. That's a big thing in a civil service, and it's become more and more, and not just for women, so men can do exactly what you were just talking about, so that everyone kind of has an equal share, or is encouraged to have an equal share of domestic load. I don't know, again, I mean, COVID, I think, was really revealing about the disparity there, and I know lots of people in my team, I was really conscious that the women were working and were looking after the children much more than the men were, no matter how fair and balanced it was. I was really conscious of that and tried to sort of really actively, I mean, how do you do that on Teams, you know, to really support them and kind of encourage them to maybe share the burden a little bit more. So all these micro behaviours, I think, are really key as well. Again, I was going to mention this, so just bringing people in, everybody, men and women, the quietest person, getting everybody's views, and kind of, we know that this diverse, inclusive contribution, you know, delivers better outcomes generally. So, and I'm personally really driven by outcomes and commercial focus. I'm not really that, you know, I do lots of extracurricular things, like I do loads of stuff alongside my day job, but I really love my job. I really want to drive up the economy and drive up economic growth. That's what I'm really interested in. I want to bring as many good people with me as possible, and loads of those people are women. So there's the flexible workings, the recruitment processes. There's also this real thing in the civil service about being very visible. So I learn by hearing people talking about things and seeing people doing the thing, whatever the thing is. In this case, there are lots of, you know, it's great having a chancellor who is a female chancellor. There are lots of, you know, outside London as well, where there's a lot of sort of encouragement for people to join the civil service outside of Whitehall. That's a massive push, especially, well, in our department, it's a really big thing. I'm based in Manchester. And so that having visibility of senior women across, in my case, the north of England, for example, is also something that they're encouraged to do this sort of thing. And I'm working with a lot of kind of very senior women. Even the second permanent secretary of the Treasury, who works with Rachel Reeves, is based up in Darlington, for example. So, and funnily enough, lots of our ministers in this new-ish government are also based in the north. So my Secretary of State, Jonathan Reynolds, is based, you know, in Manchester. That his constituency is in Hyde as an MP. Angela Rayner, the Deputy Prime Minister, is often in our office. So, you know, again, that's quite an interesting, you know, visible example of senior people and women outside of London.
Great, thank you. I would like to open the panel for questions from the floor. You have a great opportunity to ask these three amazing women to give you some thoughts. I'll take a few questions and then maybe turn to the panel. Yes, over there.
Does this work? Okay, perfect. So you spoke a lot about micro behaviors that you do to sort of try and encourage women in the workplace. I suppose my question is, are male leaders doing the same things? And if not, how can we encourage them to do so?
Great question. Who would like to take it up?
Me.
Yeah.
I nudge them and call them out, basically. I think in everywhere, not just, I think that everybody should be doing it, as you say. And yes, you don't see everybody doing that. You don't see women doing it too. I think, again, sorry to keep referring back to what you were saying about the recruitment panel, but I do, or the not recruitment panel, just the extra stuff. Not everybody's as motivated, as each other. So I think it's everyone's responsibility to call people out, not rudely and yell, "Oi, what are you doing?" But or really kind of sort of obviously, explicitly saying, "What about you, so and so," and sort of role modeling for men the behaviours that they should be exhibiting. John.
I've always I started role modelling the behaviour which I saw from my boss, who was a man, and was always very good at promoting me. A real sponsor, actually. I've been very fortunate in that respect. And one thing he did when he had young children is he would, whenever he did an event like a parents' evening or a play or something he did, a sports day, he would put it in his diary and be very open with putting in his diary. And he did that. And I actually don't think he was doing it on purpose for any kind of aspirational goal. I just think it was in his diary and he didn't think about it. But I think it was great that he did that. And it's made me want to do that. And I actually think it was, I also called him out for doing that in front of other people too. Said, "Oh, Peter, you're so good at doing this." To make it very, very clear that actually that's something that people like to see, that men also have caring responsibilities, unpaid work outside, etc., and highlighting that and making it clear that I noticed when that happened. I just think it joins up the circle, I feel.
Great. Yeah, I think raising awareness is a very big thing. I think just if your boss knows about what non-promoter tasks are, I think he's much more likely to allocate it fairly as well. And I think having more of an awareness about their lives as well is actually positive.
Yeah. I think you also want to formalize it as well. So I mean, we don't necessarily want to rely on a voluntary approach. So so workload models are a bit of a bane of sort of every academic's life, but I think they are useful at kind of making workload more transparent. And so, accounting for those tasks in a workload model and incorporating citizenship explicitly into a promotion process, I think is probably quite a good way forward, because then you're not just relying on people, behaving well, it's actually institutionalized.
Mm-hmm.
And I think we're increasingly trying to do that. I know that, for example, if you want to make more senior echelons now, you absolutely have to be a great culture carrier. And this includes all of that. And if you don't do all of that, and actually I have had some, particularly men, come to me and say, "Oh, I'm not doing any of this, what can I do?" Which is interesting. And it's because it's been put into, this is what you're going to be counted on. Or they've been told, actually, you're not doing so well on this area. It's something you need to focus on. So I do think that does absolutely make a difference. For some people who will do it quite naturally, men or women, but some people need that nudge of it's going to be how your performance is assessed.
Great point. Any other questions? Yes, over there.
Oh, hi. I just wondered what your experience has been about the ability of women to sort of gain promotion within an organization versus changing, not only changing careers, but changing jobs as they've been moving externally. And I'm sort of asking that in light of the fact that as we've seen the evidence that women tend to be doing a much larger share of household duties and extra duties and other things, and sort of they possibly are not may value the stability or the work-life balance they have in one organization, and maybe a little bit more risk averse in terms of moving to other organizations, and how that kind of might play out. Don't know if you had any experience anecdotally, or whether any research has been done in that area.
Okay, great. All right, let's turn maybe.
Yeah, no, I think that's a really important point. I mean, so within academia, getting an outside offer is sort of typically seen as one way to kind of like raise your salary internally, obviously, as well as raising it externally. I haven't seen the stats on it, but it's a sort of accepted truth that men tend to do it more than women, and find it easier to do it more than women, because if women are taking on the greater burden of childcare, then they're sort of slightly less flexible. So I think we probably need the stats in order to back it up, but it certainly rings with lots of things that kind of people have said. And again, you want to think about that in the processes and practices you have within your organization, because if you're only going to reward good people if they come to you with an outside offer, then that's not really a fair way to kind of be thinking about reviewing your salaries. And I think maybe it's on the institutions to kind of think about that, as well as as well as women, to sort of be able to get outside offers as much.
Did you have any more to add, or?
My experience, and have you been with Goldman Sachs the whole? Not the whole time. I was at HSBC for a while, but Goldman Sachs for a long time. I'm always surprised actually at how long that our leaders at Goldman Sachs have been. It's normally 20 or 30 years, and that's male leaders as well. So I don't know if it's always swapping jobs that gets the higher echelons, but of course they may not have swapped jobs, that they might have been pushing up their salary and their role by having competing offers.
I think, yeah, slightly different. In my experience, just in the civil services, I've been lucky and worked hard and I've progressed. And I think it's very fair the way it's done actually in the civil service. That's my experience anyway. So I don't, and I haven't had to leave to get a higher salary. My salary has increased every time I've been promoted. So yeah, I don't know if it's different in different organisations. Probably it is. And I don't know the research, there will be some, I'm sure.
Okay, let's take a few questions. Karen first.
Sure, I was just going to ask, there's this balance obviously between saying, no, I'm not going to do any of that. I'm going to focus on my performance and what I'm getting graded for in my end of year review, versus the acknowledgement that a lot of that extra stuff does add to the culture of the firm and is part of being a good leader. So what's the solution? Is it about at the beginning of the year having that conversation with your manager and saying, right, this is some of the stuff I could be doing. I want to check that in all the list of priorities, you understand that that's a big part of the culture, and making sure at the outset you're going to be acknowledged for that at the end of the year? Is it about judging your manager and realizing whether or not they understand how that adds to the culture and letting that be part of your decision? Yeah, just as you read the book, I just ordered the book. It doesn't mean I won't host the WEN again, don't worry, Almudena, but just interested to know what the balance to strike personally is.
Great question. I'll take one more from behind, given the time.
Thank you. My question is about, it's really good to have so many people sort of supporting women as they go up. One of the narratives I see, which is quite the opposite at the sort of top of the pyramid, is it was really hard for me to get there. I had to face a lot of, difficulties and sort of sexism, whatever you want to call it. It's much better for junior people today. It's much better, much easier for you. And so there is some of that sort of adverse reaction of sort of, instead of necessarily being supportive, sort of, if I've been through the difficult things, then you should be able to get through them too. I wonder how you see sort of that narrative, and sort of how, if you've seen any signs of that sort of fading as sort of more and more women get up to the top. Do you think that's sort of just about the sort of timing issue of when now there is more junior people, junior women getting hired, and hopefully they make it up through the ranks, and that narrative will sort of disappear slowly, or is there anything that has to be sort of actively done about that?
Just on that, I think that's a leadership issue personally. I think, you know, you should be, it's not I did it the hard way so everyone else should. I think, you know, people, didn't Madeleine Albright say there's a special place in hell for women who don't help each other or something like that? I don't know what the quote is, but I think, you know, that if you're a good leader, you are going to help really good people to progress. That is part of your job. It's really rewarding. And just on we have this thing called corporate contributions as well, I should say, on the first question. I forgot to say that before, which is part of we're expected to do. That's actually changed now, but we're expected to do corporate contributions, which is alongside delivering our results as well. But I think shame on people who are not, you know, who have got that mentality. It's so old school, I think. But I'm sure it still exists.
Yeah, so I will quite openly honestly say I am today because of the support of people above me. So, you know, I don't feel I had to battle my way all the way up. And many of them were men as well. You know, mentors and role models are not just women. I do sometimes think that some of these panels should be, you know, a panel of people who are facing the challenges, because, you know, asking the women who've made it to the top how to overcome the challenges and making to the top doesn't seem the way to get the right answers. And just going back to your point, you know, I think in terms of like taking on these non-promotable tasks, I mean, one can do them once one's been promoted. So, you know, I think you should carry on promoting WEN, and I should carry on trying to figure out how to encourage girls into economics, because we have the time and we don't need the promotion. But in terms of the managers who aren't kind of, you know, sort of allocating things fairly, I do think that is a corporate culture issue, because they need to acknowledge that there's a bunch of jobs being done which they value, you know, and if the women start saying no, then there's going to be a real problem. So, you know, I think maybe that's a corporate culture issue, but, you know, encouraging women to sort of say no, encouraging managers to see the kind of allocation of these tasks. As I said, you know, workload models are, you know, they can be excessive, but they are good at sort of at least making things more transparent.
And I co-chair our Inclusion and Diversity Council, and that would maybe fit into these categories of sort of extra stuff which falls outside of my normal sort of work advising institutional clients. But actually that's a big part of my leadership in the firm, and I think it's very well recognized. Actually, I find that and my co-chair is a man, so it's not necessarily the case that this is always done by women anyway. I mean, I would say the council was quite 50-50 in terms of numbers. So to me, it's always been, I do agree a little bit about this point that wasn't true when I was less senior. So when I was building up, I wasn't chairing these things, and therefore focusing more on that day-to-day task was very, very important if you actually want to get up. But once you are at a certain level, then you do want to show that leadership, and that does include doing some of these types of just tasks, being on recruitment panels, sitting on diversity council, etc. All of those things, and giving you a great profile as well. And as part of that council, I also sit on the research operating group. So it's given me access to a senior leadership above me that I wouldn't otherwise have. So in some ways, just like I've said with the womenomics research, you can use it to your own advantage as well.
And I would finally add, you know, it's very important to work with men. I think we've been women on stage today, but I think just persuading men that the importance of retaining and nurturing female talent and working closely with them. There are many men who would support you and work with you, and involving them in all of these activities would ultimately make it a better work culture as well. Donald, for example, over there from Bank of England, he's been a huge supporter of UK WEN and has supported me on every event that I had to get involved in. I think UK WEN also benefited hugely from male supporters. So I think we should continue working with them as well. So I have to unfortunately close the panel now, given the time, but huge thanks to all the panelists. It's been a very insightful discussion. I think there's a lot of key takeaways for all of us, but let's give them a round of applause.
Thank you so much, Misa, and thank you for our panelists for sharing your time and your thoughts and your insights so generously, and bringing in what I think is a real diversity of thought as well in terms of how we approach some of these challenging questions. I'm Tara Alice. I'm an ambassador for the Women in Economics Network, and it's my pleasure and my privilege to provide some closing comments at our event. And what an event it has been. Absolutely amazing, stellar lineup of speakers, of course. but also so much to think about, so much to reflect on. Fascinating content on both economics and women in the workplace. And hopefully you've all had the same experience as me, meeting lots of new people as well as old friends to continue to build our network together. Of course, this is what the WEN network is all about. And Almudena spoke earlier on about the rising demand for all of these events, which just goes to show how important it is to bring all of us together, but also, as Misa was saying, bring us together with our allies, or the men out there who are also wanting to use economics and economists to change the world, but changing in a way that's consistent with diversity and inclusion. Now, we could not put on these events without our sponsors and with our partners. So if you work in an organization that might be interested in getting involved and supporting, please get in touch. It's really vital that we continue to build the movement so that we can have even more impact across a wider group of people out there. We also always want to make our events better. So you can see a QR code over there for feedback. Please provide feedback, because we do listen to it and we try and over time improve the richness of the discussions we have, the people we invite, the way we do the events, so that we have the maximum benefit to all of you who join us. You're very welcome, and in fact, we encourage you to share and contribute to our online discussion about this event. So for example, on LinkedIn, there should be some hashtags up there, or the handles up there for you to take part in those conversations. Do share and amplify the messages, including our fabulous start hand speaker today, the Chancellor, which was a fantastic surprise. Thank you, Misa, and thank you for the team for making that all happen. So I'm going to finish off just by mentioning a couple of big thanks. So first of all, huge thanks to Karen and JP Morgan Asset Management. Yes, please.
Because it shouldn't really come to me. If I could have Chloe Greenhow and Lily McIntyre, if they are in the room, they're probably busy setting up your lunch, to be honest with you. But if you find them downstairs, I deserve no credit at all for today. They have done all the behind the scenes work. So I just wanted to make sure that they got the thanks for that.
Thank you, Karen, even though, yes. Absolutely, and likewise, there are a lot of incredibly tireless people at the RES who work to put these events together. And as you can imagine, with the sort of slightly last minute reorganization of the schedule, there's been a lot going on. So huge thanks to all of that staff at the RES as well. And very finally, I just want to thank all of you for joining, for participating, for building the network and building the momentum. This is what really makes these events special. So thank you for coming, and I hope you can stay over lunch and continue the networking. Thanks.